90% of retail Forex traders lose money, not because they can't predict the market, but because they lack a systematic edge. Today, I'm revealing a strategy which is extremely wonderful. Meanwhile, we've backtested it on several major Forex pairs. Like and subscribe, we will dive in the results. Welcome to Cheese Talk. No emotions, only structure, risk, and data. Here's how the strategy works. It's built on 3 layers of confirmation. Layer 1, the 5-day, 13-day, and 20-day moving average. This is our trend filter. We only take long trades when price is above 5, 13, and 20 MA simultaneously. We only take short trades when price is below 5, 13, and 20 MA simultaneously. Simple, but powerful. It keeps us on the right side of the market. Layer 2, MACD with zero-line filter. We wait for 2 specific conditions. Long, MACD line crosses above the signal line and both are above the zero line, bullish momentum. Short, MACD line crosses below the signal line and both are below the zero line, bearish momentum. Layer 3, ATR Trailing Stop. This is our money management engine. When we enter, we set a dual layer stop loss. 1x ATR, our 5% hard stop, whichever is tighter. As the trade moves in our favor, we trail the profit using ATR multiples, locking in profits at 1x, 2x, 3x, 4x, and finally forcing exit at 5x ATR. For example, if the profit reaches 2x ATR but fails to reach 3x ATR and then retraces back to 2x ATR, take profit at the 2x ATR level. We tested this strategy on the US dollar index and 4 major currency pairs. Given that the volatility in smaller time frames, e.g. below 1 hour, is insufficient to effectively trigger the strategy's logic, we limited our backtesting to the daily, 4-hour, and 1-hour charts. In the 1-day backtest on the US dollar index, this strategy performed nearly flawlessly. The equity curve shows a consistent upward trajectory, delivering a return of 54.5%, significantly outperforming the buy and hold benchmark. The win rate also stands at 54.5%, with a maximum drawdown of 0. In the 4-hour backtest on the US dollar index, the strategy delivered uneven performance, with returns slightly lagging behind the benchmark. Both the maximum drawdown and peak returns fell short of those achieved by the buy and hold benchmark. In the backtests across all time frames for the US dollar index, the 1-hour chart delivered the weakest performance. It posted a win rate of just 47.44% and a return of only 1.89%, though it still managed to outperform the benchmark's negative 3.09% over the same period. In the 1-day backtest on USD JPY, the equity curve followed a reasonable upward trajectory. The win rate exceeded 50%, and the strategy delivered an impressive return of 72.07%, significantly outperforming the benchmark's negative 55.13% over the same period. With a maximum drawdown of 0, this proves to be a fairly robust strategy. The 4-hour backtest on USD JPY delivered quite poor results. The return was only 8.61%, significantly underperforming the benchmark's 45.97% over the same period. Additionally, the equity curve started with early losses and only turned profitable later in the period. The 1-hour backtest results for USD JPY are reasonably solid. The equity curve shows a steady upward trend, with a win rate of 51.67%. Although the overall return is slightly lower than the benchmark, the maximum drawdown remains at 0, ensuring the preservation of capital. The backtest results for USD CHF were relatively poor. Although the return exceeded the benchmark, it still resulted in a net loss. Moreover, the equity curve was highly volatile, proving that the strategy proved ineffective for currency pairs like the Swiss franc. The backtest results for USD GBP were quite strong, especially on the 1-day time frame. Although the returns fell short of the benchmark, the equity curve showed a steady upward trend, with a win rate of 52.35%. On the 4-hour and 1-hour time frames, despite lower win rates, the strategy still delivered positive returns during a period when the benchmark itself was negative. The backtest results for USD EUR were particularly strong on the 4-hour time frame, with the equity curve showing a steady climb and both returns and win rate performing reasonably well. On the 1-day and 1-hour time frames, although returns exceeded the benchmark, the equity curve remained unstable. Overall, the strategy demonstrates a clear advantage in medium to long-term trend following, particularly when applied to the US dollar index and USD JPY, while caution is advised when using it over shorter time frames or on specific low volatility currency pairs. Like, and subscribe if you are into this video. Leave a comment to tell me what kind of strategy you want to backtest. Thank you for your watching.